Good morning and welcome to OETV and the Crypto Dome. We are here with Adam Blumberg, co-founder at Interaxis. Adam, welcome back, sir.
Oh, good to be back here, Mehdi. Of course, as we say, I think this is almost our tagline. Always something to talk about in crypto.
Always something to talk about in crypto. You know what? It's been an interesting week since we last spoke. It's been more volatile in the traditional assets, I feel like, than the likes of Bitcoin, which has almost shown some stability hovering around the 20,000 level. And, I feel like that's the safest investment right now. But that's just me. I might be slightly biased. I don't know. What am I going to say?
Maybe a little bit, but you're right. Look, there has been some, I guess, stability. That's an odd word to say when it comes to Bitcoin and crypto, right? But there's been some stability there as opposed to what we're seeing in NASDAQ. And you and I have talked for the last 6 months about how crypto has almost exactly followed NASDAQ. Yeah. And here it is. We see the traditional markets continuing to head down, wondering what's going to happen with the world economy and a war and all that. And Bitcoin and ETH still holding their own right there. They seem to have hit a floor, and I'm not going to say this is it. I'm not going to say that's the floor, but it's reassuring right now to see that maybe people are taking a look at them for what they could be in the future, the future value, and not necessarily let's just trade them exactly with NASDAQ.
Now, granted, if you're looking for some volatility, you might want to start trading Twitter more than Ethereum or Bitcoin. So, that option is yours always. Let's dive into some of the news flow. There's been tons to talk about, even though we haven't necessarily had the volatility to back it up. But there's some good and bad mixed news flows out there. Mm-hmm. Let's start with some regulatory chat. Let's get it out of the way. The CFTC Chair called Bitcoin and Ethereum digital commodity tokens, and they need more power from Congress. Are we going down the right path with this classification of a digital commodity token? Is this like the start of something good, or are they completely off the mark here?
Look, I think it's definitely better than being a security. Yeah. Right. So it's more, I feel like it's more in line with definitely what Bitcoin is. ETH, I think, is a kind of different animal, and we're not quite sure. But if you're asking me what I would prefer, if I had to choose between ETH being a security and a commodity, I'm going to choose a commodity because of the regulations around it, because the CFTC governing it rather than the SEC, kind of the precedent it sets. So I'm going to choose a commodity. We're also in a good place if there's finally some sort of clarity, right? Regardless of which direction it is, just give us some clarity and let us know what direction to go so we can continue to move forward. From what I've read, and I'm not a securities lawyer and I'm not an attorney in that respect, but I feel like I like the idea of the CFTC, if anyone, governing them, because then they can start managing the spot markets, the futures markets, all of those things especially for Bitcoin and ETH. And again, I think it sets a little precedent that says if your token follows these kind of rules, follows the same things as Bitcoin and ETH, then you will likely be considered a commodity. If it goes another direction, now we kind of need more clarity.
So, Adam, also just tying on to, you mentioned the crypto spot side of things. There was a US Risk Watchdog which was chasing Congress to have a bit more clarity on regulation around crypto spot side of things. So we're going into a decent direction to start looking at the crypto spot market and potentially opening up the doors for an ETF as well.
Well, I feel like we keep going that way. And part of the ETF, the spot ETF conversation comes back to who's going to regulate the underlying asset, right? Because it's really hard to have a spot ETF in Bitcoin in particular when you're not quite sure who's regulating the Bitcoin market and how safe and secure it is. And I think that's part of what the SEC has been wondering about is having this, what you and I both know will be a monster ETF, spot ETF. For a market that might or might not be regulated. So what you're alluding to is this watchdog that it includes Janet Yellen, includes people from CFTC, from the SEC, from major financial institutions, and as they were asked to do in the Biden executive order way back, I think it was in February, the beginning of this year, they produced this report, and their report basically said, we recommend that, that the CFTC and SEC divvy up who has control over these things, and Bitcoin and ETH be commodities. And they also recommend some sort of better regulation around stablecoins. Those are kind of the two big things right now that they've recommended to this administration and to Congress, which would be great. I mean, we'd love some clarity. I think stablecoins do need to have some bit of regulation around them. You can't just, obviously, you can't just create them out of nowhere and just decide there's going to be $1 trillion more something that looks like $1 out there, and not have the public understand where that's coming from. So there does have to be some bit of regulation around it. And I like the fact that this watchdog is saying we need that. And they didn't, as far as I know, and I didn't read their entire, I think, 180-page report or something, but I don't think they laid out what that regulation should be. But, I agree there needs to be some sort of guidance and regulation. I think this is going in a decent direction. Keep in mind, though, Congress is about to break for a while. There's going to be a new Congress when we get back in, January, February. So it'll be interesting to see what direction they decide to go.
Adam, if you're a firm like a VanEck or a Grayscale and you've had your ETF rejected already, does that preclude you from reapplying to be able to, once, let's say, the regulators turn around and say, we are going to approve a cash ETF in Bitcoin, are you precluded from reapplying to actually set one up?
Oh, no, they can reapply over and over and over again. And as they've done so far, they've gotten them rejected, and they keep reapplying, and they keep, pointing to either new stability or new rules or new players or new liquidity in the market or something, because they're certainly not going to not have their application in when someone finally gets approved.
So just a slight pivot here in our regulatory / conversation. Coinbase, right? There was some news around this weekend about how Coinbase was restricting access in regards to deposits and withdrawals. This should surely get the neck hairs on the regulators spiking a little bit, just in concern with an exchange not being able to manage this. Like, how does this play into things?
Well, as far as I know, it was more of a tech issue than anything else. It wasn't like a liquidity crunch or anything else. It was more of a technology issue than anything else. But as you said, the regulators are looking at that. Like, if I can't go get my money out of the bank at some point, that's a problem, right?
It's a concerning situation when we had issues with there was rumors around on the weekend in regards to someone like Credit Suisse having liquidity issues, and obviously a lot of this has been debunked. But then at the same time, see things like Coinbase saying, you can't withdraw, you can't deposit US dollar accounts into Coinbase. All of these things make your retail customers start getting a little nervous.
They probably do make them get a little bit nervous and something for a little bit of concern. But, as we saw, the tech issues with Coinbase is that there's not a whole lot they can do to solve it. I believe there were pending Bitcoin transactions, and there's nothing you can do to force those out. And there's nothing Congress can say. Bitcoin is Bitcoin, and it's going to transact how it transacts. And Congress can't put a rule in place that says you have to throw that transaction out to make the chain keep going. So, I mean, those are the issues. It does give some pause, except that the issue is not necessarily a Coinbase one. It's a Bitcoin issue, and they can't regulate that. But you're right. It gives some pause. But that's where any investor kind of needs to do just a little tiny bit of homework, and not have everything fall back on there needs to be a rule. And this, Mehdi, I know this will go into a little bit of an opinionated aside from me, and I apologize for that. But there's a little bit of me that I think we'll talk about something later. But the U.S. investor, the U.S. quote capitalist, always wants the ability to make money the way they want to make money. And I need Congress and the regulators to get out of the way if there are ways that I can be a capitalist and make money, until such time as I lose money. And then I want the regulators and Congress to step in and make a rule and punish the people who made it to where I couldn't make as much as I thought I could. right? And that's kind of a problem. Like it's really hard to have it both ways. And if you're going to keep running to Congress and asking them to make new laws every time you lose money, then they're going to have all the power.
That's also known as having your cake and eating it, Adam.
Right. Exactly. And I feel like there's a story coming up later where I get to expand on that a little bit more.
Oh, yes, and it's a doozy.
Yeah.
Let's talk about the metaverse briefly.
Sure.
There's been some banks delving into this. The latest one, and significant one, a big Asian player, DBS, very well regarded. It's a sizable bank, has started dipping their toe into the metaverse. It's kind of exciting, kind of fun. It feels great to be able to wander around the metaverse, go do your banking as, you know, a winged ape or something, and off you go. You know, this is kind of cool.
Yeah. Look, it's DBS getting in there, and they follow in the line of JP Morgan got in there, Fidelity, I think Standard Chartered in Africa got in to the metaverse. I'm not quite sure if they know what they're doing. And in this case, I need to point out it was DBS getting into Sandbox, which is one of the many metaverses, Sandbox, along with Decentraland and Crypto Voxels and a few others. But they got into Sandbox, which is a pretty big one. I'm not quite sure if they know exactly what they're going to do, but it's exciting that they're getting in there. I mean, I can hypothecate and postulate on what they might do. And as you said, I might be wandering around Sandbox as a Bored Ape and decide I need to go take out a deposit, or, you know, or deposit some money or take some money out. The question is, am I going to connect my wallet and take it out in crypto from DBS? That would be interesting, right? If they start custodying, you know, USDC or DAI or Bitcoin or something, and I can go in the metaverse, connect my wallet and take money out and do something. I'm not quite sure what they're going to do. I don't think they know, but I think it's the equivalent, Mehdi, of if we look way back to like 1999 and 2000, if a bank had a website, well, there wasn't a whole lot of online banking at the time. It wasn't safe and secure, but that was the beginnings of, okay, the bank has a website. Maybe I can use that website to find out where my nearest branch is or something, or get a customer service number where I don't have to get the yellow pages out. Maybe that's the extent of it here, but we know where online banking has gone, and we know where fintech has gone from there. So some of these banks or some of these financial institutions getting into the metaverse, it's a matter of adopting, dipping their toes in, seeing what that Bored Ape wants. When the Bored Ape walks into the metaverse bank, what are they asking for? And then the bank is there to go, all right, we're going to try to give it to you then, instead of waiting around for 5 years to figure out what the business model is. Let's just jump in.
So rather than being a driver of adoption, it almost feels like, you know, I don't want to say throwing spaghetti against the wall, but it's almost a call option on the metaverse taking off, and, you know, they have a small footprint there. It's probably a minimal investment. It gets them some exposure to it.
Yeah, I think that's exactly what it does, is it gets them in the door. Again, I don't know exactly what their plans are. The story that you and I both read doesn't talk about, you know, the depth they're going, but it gets them in. You certainly don't want to be the last bank in the metaverse, I don't think. If everyone else jumps in, you don't want to be the last one. They go, fine, we'll jump in there. You'd rather be one of the first and kind of be the one that gets to set what the business models are there.
So you mentioned Fidelity, and we seem to mention Fidelity every week. They seem to be leaning into this whole world of crypto in one way or another, and NFT universe and metaverse and every other verse. But they announced that they are going to be offering an Ethereum Index fund as well. How does this sit in the universe for you?
Look, I think I said on Twitter or LinkedIn or something, I'm not, as a purist, I'm not horribly happy with it, because it's taking one asset, Ethereum ETH, and wrapping it in everything in traditional finance, charging fees for it and all that, just so investors can have access or exposure to ETH, which doesn't sit well with me from a purist, because I just go buy ETH if that's the case. I know that it fits more easily into reporting and management and retirement plans and all that. That doesn't sit well. The good part is more people getting exposure to ETH, right? The good part is more people understanding the volatility and more people getting in there and seeing what the market is like for people to invest in something that isn't Bitcoin.
So, Adam, can you break this index fund actually means? Like, is there a connection with underlying ETH, or is it just completely indexed?
It seems to me like it's just completely indexed. I mean, to me, they can't have a spot ETF, right? So how can you have? I can't imagine that they could have necessarily a spot index fund. They're just going to track the price of ETH.
Okay, so it's not like a closed-end fund where there's an element of underlying coin.
From what I read, that's what I understand, and forgive me if I'm not completely understanding what they're doing.
I was just throwing it out there. I don't know either.
Right. What you're mentioning is by owning some of this index, am I essentially going to own a little piece of ETH, and therefore theoretically I could redeem it for ETH at some point? Is it kind of like a bearer instrument, or is it just a fund that does nothing but track the price of ETH? And my understanding is it's essentially just tracking the price. It's following the index, and the index is one asset that moves up and down. And again, as a purist, I say if you want exposure to the price of ETH, go buy ETH. It's really simple.
It'll be interesting to see how Fidelity chooses to hedge the index as well.
Yeah, exactly. Look, the nice thing about ETH as opposed to Bitcoin is you can go into decentralized finance world and hedge ETH all you want, right? It's a lot easier there. There's plenty of decentralized options for Fidelity to do it. And I know if any big traditional custodian knows how, it's Fidelity, because they've been playing in crypto for like 6 years or so. So they definitely know how to do it. And ETH, I hadn't thought of it till you just brought it up, but it's definitely an easier asset to hedge, I believe, than Bitcoin, just because there is this decentralized market. And keep in mind, this is the same decentralized finance market that actually completely stayed solvent and afloat and everything as Terra was burning down, and Celsius and Voyager and Three Arrows Capital. But all those decentralized finance protocols, whether it's Aave or Compound or Maker or whatever, they all just kept going. So when you bring it up, look, it's relatively easy for Fidelity to go hedge. What do they have? $5 million already invested in it. $5 million to hedge in DeFi is actually pretty simple.
Perfect. So
let's you and I, Mehdi, you and I go spin up an index ETH fund.
Hey, listen, I'm in. Crypto Dome Index. Here we come.
Yeah.
So we go from Fidelity, who has been in the space for several years, and we kind of put them at the forefront of the knowledge base in crypto. Flipping over to our friends, the Kardashians. Poor old Kim Kardashian just got dinged by the SEC, sending condolences for your 0.0007% of your net worth being the fine. What happened here?
You're trying to make me cry, aren't you? You're trying to make me cry. We're talking about real crypto stuff, and you bring in the Kardashians.
I had to wrap up with something that was going to get your neck hairs going up. Yeah. So it is what it is.
Right. Well, here's the interesting part, because I've there have been people I know that are attorneys and such that have gone on business shows this week to talk about this particular topic. And the reason why it's interesting is because in the last couple of years, you saw all these celebrities endorsing exchanges and endorsing FTX and crypto.com and several others. And crypto.com, of course, has the LA arena and such. And so you wonder where the liability is. Like, where are they liable if people lose money? And this is kind of what the SEC said is, in this case, Kim Kardashian directly promoted one certain crypto asset called Ethereum Max, which was obviously a security. It was obviously nothing more than a ploy to try to make money. Ethereum Max is kind of a joke. It was also, I believe, endorsed by Kanye, I think, and some other, I don't know if it was Kanye, but there were some other celebrities that were endorsing Ethereum Max, which was not in any way, shape, or form part of Ethereum or Ethereum Classic or anything else. It was simply a ploy to try to create this token, build it up, and make money. She endorsed it on, I believe, Instagram, maybe TikTok or something, without obviously understanding what it is. Got paid for it. That's the big piece. She got compensated for it. So it's not that she just talked about it. If you and I talk about it, it's not a big deal. If we got paid by Ethereum Max to talk about it, that's the big deal. And this is what the SEC said is you, Kim Kardashian, are not a financial advisor. You got compensated to pitch a security A lot of people lost money. You're going to get fined for that. It is not the same as LeBron James and Tom Brady and FTX. And it is not the same as Matt Damon and crypto.com, because they're not promoting a certain crypto asset. They're promoting, they get paid to endorse a company that allows you to, if you choose, trade crypto. So that's kind of the big difference here. And then I'll go back to my opinionated soapbox that said people lost money because they bought something because Kim Kardashian, of all people, said you should buy this. And then she gets fined because people got upset that they bought something and lost money because, of all people, Kim Kardashian said to buy it. I think this is a little bit ridiculous for anyone who's complaining that if you're going to say, I want to make 1,000 times my money, and therefore I'm choosing to not listen to any financial people, and I'm going to choose Kim, then I kind of feel like you get what's coming to you.
So, Adam, I'll be honest, I had to throw that question purely because you obviously, your background is the allowing the certification in crypto education for financial advisors, and this is on the absolute polar opposite of what you stand for. So, I was not trying to wind you up, but
I appreciate it. And look, if Kim and Kanye and LeBron and everything want to teach a course to financial advisors, I'm all ears. Let's go do it together.
We should probably reach out to the Kardashians and see if they want to get themselves certified before they start making this mistake again. But
that would be great. I will happily do a celebrity class.
Fantastic. Let's get it done. Yeah. Adam, there's lots to talk about as always, but we are ending our time together today. But we'll be back this time, same time next week, live at 10. So please join us. Adam, thank you. And everyone watching, thank you for watching, and good luck investing.